All right, so it's Friday, July 29th. Going to do a quick update on the crypto market in general, and a look at how the 19 is still performing as an educational tool that I'm continuing. Again, none of this is financial advice. You choose your own indicators, you can choose your own assets. This is an educational series because I think it's important to have a historical um, journal of how the performance is over time. And so a lot of the a lot of the conversations that we have about what the potentials are of technical analysis, um, some people may say it just is not possible, it cannot do this, cannot do that. Some people overstate what it can do, right? And so using this educational series is just an example of what my particular um, method, right, performs, right? So, yeah, we'll just take a quick look this morning and thank anybody that is up viewing this and some of the comments that I've received and people who are benefiting from this. So I'll try to keep it up. I'll start off with the DXY. Everybody should be able to see on the screen. And the interesting thing we have here, along with the crypto market ticking up over, over the last couple of days, is we see that break of the 19, right? So not only did we kind of get these little wicks down, but we're actually starting to establish candles, and we're on a daily chart over here. We're starting to establish these candles here. So we see the three crossed over the 19, so that did give us that momentum that led to these candles closing here. Interestingly, if I zoom in here, we should be able to see that the nine, the blue one, has not yet crossed the 19. So if we get this blue line over the 19, the yellow line, I think that'll give us some additional momentum, and we may go down here and test this EMA here if we get that cross. So we'll be keeping a lookout on that, seeing if this dollar is really going to cool off or not. Right now, we're in a daily downtrend. We want to turn that daily downtrend into a weekly downtrend, so we can turn the trend a little longer. Um, um, as it applies to the DXY, right? So we see we had a test previously back here, right? So that would kind of equate to here in current time. It crossed back, got hot, and did its thing and went on to all-time high. So this is what we'll be looking out. We'll also see in the dip here when it started cooling off, it came and the three bounced right on that 19, turned back, right? So we got this green candle, and then it lost that energy. This time it actually crossed, which gave us this candle closing under here, right? And so this is why it's important to have these other moving averages up, because although we're only pivoting off of this 19, you get some heads up as to what to expect by these crosses, momentum crosses, right? So now let's jump on over to Bitcoin, see what Bitcoin is doing. And of course, we're on the daily chart, so I will take us up to the weekly, but we zoom in here. Interesting dynamics, and that this has kind of been our bottom, right? And when as it attempted to recover, the three couldn't get over the nine, retested the bottom, caused some energy. Three made it over the nine and made it over the 19, right? And then re-lost it, crossed both times. But the blue didn't cross, which is the 11 in this case. The blue didn't cross the 19 in this potential move up, right? So we should have had some indicators there by that stall out that wasn't going to be a sustained move, right? Came back, retested this bottom to get that strength, and then this time you had the double cross. So you had the three and the nine finally break as it broke the 19, which would have been your end signal, right around 21,000. Um, and then yeah, it went right up to test our next successive EMA. So that was our clue of what was going on at that particular time, um, by visually being able to see that this is what we were going to expect as resistance. Came down on that resistance, and interesting enough, didn't, I mean, kind of crossed, but didn't, quickly V bottom kind of with that three as it lost this 19. So you'd have had a quick out, picked up some if you did, get ready to come back in on it. But we had that quick V that was the indicator this is going to be interesting, right? So we didn't have the nine cross down on the down move like the three did. The three started to break a little bit under there before it V'd out. The nine didn't break, so it was kind of telling you strength was coming back. And it did, right? Broke here, finally broke that next successive resistance that we have in our indicators. And interesting enough, is now using the next successive one as its resistance. So you can see in real time how price actually reacts, not just randomly to previous candle patterns in the past, and not to any particular price over here as an actual price, but the overall price action, right, is reacting directly to these moving averages. So the current resistance is here. If we zoom in, we'll see even more interestingly, right, to prove my point that even when it gets support, it's getting support right off of the three. So again, like I said, I have these other ones up here that help tell the story, right? Even though they're not what I trade off of. But I mean, if anyone wants to tell me the statistical probability that it's grabbing support right there off of this three, then we can see that price is directly responding to these moving averages, not random candles, not Fibonacci's overall, because Fibonacci's are good. I don't speak against them, but in general, you can definitely see that it's responding to these moving averages. So, like when you're on a daily chart here, a daily um, open candle that it opens above the three shows kind of a strength move, right? If you have a daily candle that opens below that, then it's probably indicating some momentum to the downside, getting support at these nines, getting support on these if you happen to lose some of that momentum. And then, of course, if you lose the 19 here on a daily, you would just be finding a portion of the portfolio to sell and pick up some on the downtrend. So your pivot point is always going to be here at the 19 as a reminder of how important this whole methodology works is off of making these moves absolute, right? There's no deviation that you have to have discipline on these passes. You're making the ins and the outs each time. And you're not going to have a lot of them, which like that was one, two, you count that as three, four, five you've had here and over, since basically what we counted July 10th. So not a lot of trades, but you have to have discipline to hit them. And this is a choppy time. You could go, if I was to kind of zoom this out, you could see that you could go long periods of time without ever, breaching the 19 to even have any trades after you make your out. So like here was an out, and you literally, and these are days in bars. So you could just imagine here, right? You had no days where you made no trades here until you went in. So there was a very long period of time that you had no trades because you had no touches of the 19. So it was an easy trade here out. It picked up to the bottom and an easy trade back in, even though you didn't get much or you didn't get nothing, right? But you did have another easy signal out. You picked up XR Bitcoin. You had an easy in. You're riding it. Another easy out, picked up Bitcoin, another easy in, and you're riding. So that's how you work in this 19 if you're following along with me. I'm going to quickly take a peek in on the weekly and keep this train moving. So this is what we're looking like on the weekly. Kind of got that bottom in, showing right here. If this ends up being the bottom, we see at least as a recent bottom, it certainly is, right? So we'll call it that. The momentum lost, turned up. We're using a 9 currently as resistance. We're getting them open candles above the 3 showing strength. So this is what we have on the weekly right now. What we want to see, of course, is the break here at 29, and that would turn the trend so we could expect some higher prices with resistance as we see here, right, being considered. We could break this. This is what I call the price discovery range because you don't have any EMAs as resistance, right? If there is some resistances in there, I just think of them as being very weak. The important thing are the ones that I use in here. So this kind of puts you in price discovery range at around 36, unless there's something indicated on the monthly. But yeah, these are starting to turn. So you don't have the threat of a downward cross. If anything, you have a threat of the 3 crossing back over this 11, hopefully even back over this. I think this is the 200, and you're starting to get this curve so that this bounce off of this and doesn't end up crossing, because this crossing, this 200 would be bad, probably being a new low, right? So this is what you don't want to see the most in this setup, is this yellow line continue on some at some period of time in the future and then cross this 200. That would be bad. So that's what we're keeping a look on. All of these crosses are kind of being prevented because of the current upward momentum. So you can kind of visualize what's going on. Even up here is showing, again, some strength. So I'll dip in on the monthly. And we can see our supports over here. So kind of at least what I like to give a visual here. Got a clear support on this moving average now. Well, actually, we're up here testing. Here, let me zoom in. Excuse me. So right now we're testing that actual moving average right here. We didn't have to change any numbers or manipulate anything, right? Just boom, change over to the month. We see the actual resistance on this line. It's not responding to previous candles. It's not responding to Fibonacci. It's responding to the EMA. The weakest resistance is coming here in about 25. Then you have your trend turn as we had there at about 36. So I think that a break of the 19, either weekly or monthly, right, to get in the price discovery range is coming in at 36. Strong support here that's never been broken historically at, well, we had a wick down, of course, but strong overall support that's never been broken here. And if for any kind of worst case scenario, something were to happen, we still have a very strong support here at around 15.7. So I wouldn't expect any prices beyond that, according to the 19 theory. And of course, if we do lose that, our indicator would be telling us to sell a portion there anyway. But right now, we were buying these supports and looking for resistances as we go up. Like there's no selling in this market right now. Let's see where it goes. I'm gonna take a quick peek in on XRP and start off here on the monthly. We see how it caught support right on our same EMAs. We don't have to change any numbers. That was the bottom, the lowest EMA that could be found, right? Actual support, beautiful support without changing anything. See these crosses that were happening that was giving us that downward momentum that we're now trying to turn out. Like we had clear crosses to indicate this downward momentum that led us to this bottom, but it held and we're getting some green going up. So let's go back to the weekly and take a look. Weekly, we are opening, or we're up here at least. Not maybe we didn't open. Yeah, it had to open above the 3. So we were showing a little strength. We need to get above this 9, obviously. So we got a little work to do. And best case scenario, our break period for long-term trend is at 47.5 or so. So be on the lookout for that with obvious these resistances to get past before we get into what I call price discovery range at about 66, rounded up, say 67. And then you kind of get what I call clear skies. So that's what we're looking at from a weekly perspective. Drop down to the daily. Daily's looking good. We had our break here after the cross. 9 never crossed down, so let us know it was all going to hold. Coming up here and testing the actual EMA here. So, no, right now we're losing. We tested it, right, but we're going down. We're losing a 3, excuse me. So, yeah, we just kind of keep watch on that. The interesting thing is if you took this entry, then your obvious out is here. So that's what I mean by your performance goes to discipline. You can't sleep on this out because you had a few trades recently. Just like here you took it, just like here you took back in. If you lose this daily, that's where you want to be. So I think that's the main difference is I try to add to what I show from an educational perspective. If you can find something that works for you along these same lines, is you have actual entry and exit points in real time that move based on the health of the market. So I don't have to know what an entry point or exit point is because it's going to move based on the market. So entry points previously were coming in back here at 33 cents, right? Now entries and exits on average are, because of the average of the historical price action are coming in at 35. So this is going to be a fluctuating thing, but I don't have to guess at any of this. I just know that I just need to be able to locate the 19, and it's going to give me what I need to know. So yes, we've had some choppy passes up in here on the daily for people who want to catch some of the early entries using this method, or if you tweak your numbers using your own method. But yeah, the exit point as of right now would be right there at about 35, and we just keep watch, hoping that it keeps support and moves up and test these, trying to get towards the price discovery range. So that's what we're ultimately looking for. Uh, Go back to a weekly since I showed some of that choppiness, right? But here's the important thing: if you are one of the like long-term people who definitely want to keep it to less trades, um, and you're comfortable with the differences in numbers and and executing this, because it depends on what you did. Like if you have been doing this for a time and you got out here, right, you've picked up so much more of the asset that being specific on these entries is not as important to you, because you're playing, you're executing with a win either way based on this percentage gain that you had on this drop. If you're just trying to execute this as a new entrant of some kind, right? You're just wondering, should I wait until 47 to make an entry? Well, it's a solid entry, but you have to be comfortable losing, the difference between entering now and then, right? So that's just the important thing to take in consideration. Um, but over here, you didn't have any of these choppy trades. You exited way back there, and if you're using it from this long term perspective here, you're just waiting for a confirmation over here, and there's not much that you are doing right now. Just seeing where price goes. If it happens to continue to go down, you get more of a bargain, right? Even if you're holding on to cash, or if you're holding on to cash as a result of this, right? Either way, it doesn't matter for you, if it's going down, right? If you entered now, then you want to know when to exit in case it goes lower. And I've indicated that over on the daily chart. So as if you have a move to make either way. Um, but the important thing that we're looking for is a long-term trend turn, breaking this 19 on a weekly chart, which normally ties up to the highest well, yeah, that's the important thing. So yeah, let's see what else I want to cover quickly here. Quickly show quant, because I know a lot of people are talking about quant, and I've been critical of it because of some of the regulators and what their potential are. But from a charting perspective, I'm gonna keep showing it right quick, since I I have in the past. But we got that three cross established. So this 19 is kind of now support, and it's moving on up as a result, right? So we see exactly what we wanted to see: weekly action above the 19, turning that trend. Now, the important thing with this is, if this is an early indicator, then our other assets, Bitcoin and others, right, may be getting ready to follow suit and start establishing their 19s as support from this weekly perspective. And we know what those numbers were at. So that would, that's what we want to see. If this 9 crosses above that 19, this is really going to influence this upward momentum on quant. So quant is definitely something you want to keep your eyes on. It's showing hella strength in a very uncertain market right now. So it's interesting. Take a look over here on ETH Classic. Same dynamics. We're on a weekly chart. We broke that 19. We got the 3 that started crossing. If I go here and hollow this candle out, we can see a little better. We got the 3 that started trying to even cross some of these higher moving averages. And this one is in that zone of kind of what I call price discovery. There's no additional EMAs above here to kind of provide that resistance. We see the 9 trying to cross that 19. That would give it some additional momentum to the upside. So that's what you're looking like over here on ETH Classic, which is showing a lot of strength in this very uncertain market again, right? Which is very interesting. Um, like lots and lots of strength. So if Bitcoin is getting ready to follow this pattern at some time, then we're looking to get in price discovery range, as indicated by what Ethereum Classic is over here doing. So I'm gonna dip in on the monthly and see what it's looking like. Yeah, see, it's just well above its 19 and 9 and everything. Here it's just back in the price discovery mode. Let's see what the candle's looking like. I mean, the cross. So we got a potential cross of the 3 over the 19 um, going on right there. The 9 rejected, said that it was getting ready to get some strength. So you would be looking for this white line across these, and this ETH Classic. I'm not endorsing this by far because I've never purchased any, but I'm just using it as maybe an early indicator in the market based on its performance and showing people what it's doing and how it is performed. Interest in the 3 came there, rejected, came off of it, crossed, see the price go down. So yeah, interesting stuff. And that's ETH Classic. And I think that should kind of close me out. I'm not going to make this a long one, but the 19 is certainly still doing its thing. So importantly, if you're a Bitcoin person, you want to know the health of your asset, throw up your EMAs, and you got all the information that you need to rely on, man, to understand the kind of strength of this market. Um, yeah. So thank anybody that catches this. Leave any comments if you want me to pull up some specific assets that you all are following that I'm not engaged with. Um, just put it in the comments. Engage with me over on Twitter, and we'll take a look at some of your assets and some of the future broadcasts. I'll be posting a link so you can actually hit the tab and join in live, and we can discuss your asset. Um, yeah. So until next time, man, y'all be safe, and I wish y'all prosper. Have a great day.